Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Franklin Electric, and let me tell you, it's electrifying. Okay, maybe not literally, but we're going to decode what this company's been up to and see if their performance is shocking or just plain old boring. This report gives us a peek into what Franklin Electric's management is telling investors. It's like a company giving its report card. We'll look at what they are focusing on and try to see through the nice presentations and get to the real details. Before we jump in, if you like seeing companies explained in simple terms, make sure to subscribe. Also, we have a Discord community where you can chat about all things business, so check out the link in the description below. So what exactly is this report? It's basically Franklin Electric sharing materials they plan to use when talking to investors. These materials are found in the investor relations section of their website. It's like a sneak peek into the talking points they want to highlight. The company has included a copy of their investor presentation as an exhibit. Think of this presentation as the highlights reel. We'll look through some of the slides. This kind of report, called an 8K, isn't officially filed in the same way as a quarterly or annual report. That means it has less legal weight behind it. So companies have to be a bit more careful about what they include in official financial filings, but this kind of report is a little more free. That's all the real details in the report itself, so let's dig into the presentation and see what it tells us. The presentation starts by talking about the company as a whole. At a glance, we see that Franklin Electric describes itself as a global leader in water and fuel pumping systems. Basically, they make pumps and related equipment that move water and fuel. They operate worldwide, so they aren't just focused on the United States. This gives them diverse markets into the presentation, also talks about their key markets. They sell products for water systems, fuel systems, and what they call distribution. In the water category, they cover everything from residential to agriculture and industrial uses. For fuel, they're in retail and commercial fueling. Distribution seems to be a general category that includes various industrial applications. The company is really trying to show that they are diverse. This is a good thing, since if one market is down, another might be up and help them be stable. It talks about how they've achieved record sales, are expanding in key areas, and are focused on innovation. These are usually the key things companies want investors to focus on. Let's keep these in mind and see if we can back them up with numbers. One of their slides highlights strong free cash flow generation and disciplined capital allocation. Free cash flow is basically the money a company has left over after paying its bills and investing in its business. So strong free cash flow is a good thing. It means the company is likely making more money than it spends often. But let's dig a little deeper into the numbers themselves. Here, they're presenting their sales performance quarter by quarter. This helps to show if they are trending up, down, or staying steady. The report highlights a few interesting financial figures, so let's see what they are telling us. For the first quarter of 2025, they reported net sales of around $542 million. That is compared to $57 million in the first quarter of 2024. So sales are indeed up compared to last year. The numbers show sales are up in the US and Canada, but lower internationally. They also break it down by their different segments. It looks like most of the growth came from their water systems segment. So they are very focused on earnings and cost control. Adjusted diluted earnings per share, or EPS, went up to 122.2 in the first quarter of 2025 compared to 1.032 in 2024. EPS is one of the key ways of evaluating how well a company is doing, so the company is eager to show how it went up. Looking ahead, they are estimating earnings per share to be in the range of $5.15 to $5.05. These estimates are based on what they expect to happen in the rest of the year. If they hit those numbers, it means the company believes the year will be a good one for them. Now, taking a step back and looking at the big picture, Franklin Electric seems to be moving in a positive direction. They're highlighting sales growth and strong cash flow. Their diverse operations help them reduce risk, but the challenge will be maintaining growth while also keeping costs under control. Some potential risks could include changes in economic conditions, shifts in demand for their products, and competition. The company will need to keep innovating and adapting to stay ahead. Overall, Franklin Electric is presenting a confident picture to investors. The numbers seem to back up their claims of growth and profitability. However, it's always important to remember that presentations are designed to be positive, so it's up to investors to do their own homework and consider all the factors. Alright, that's a breakdown of Franklin Electric's investor presentation. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.